So it's only the Hang Seng Index and Shanghai which are in the red in the Asian markets.
And when it comes to the underutilization of the term loans, it has come down.
Since there was an exemption given to the use of credit cards for international travel and stay, that exemption has been misused.
And we're getting closer and closer. The 20-day has also risen up.
Gland is extremely disappointing in terms of a performance this time.
A lot of the capital we do have on our books is meant for new investments.
The Nifty is now up about 40 odd points. The mid-caps are very, very quiet.
You have the mid-cap index near lifetime highs. I mean, who would have imagined 6 months back that you will see such a kind of a rally?
We are degrowing a corporate book. In last 1 year, the book has come down by almost 50%.
The markets were below 18,100 on the Nifty, a cut of about 0.1, 0.2%.
That the Supreme Court today has dismissed the Tata Motors application.
The TCS at about 5%, and this is supposed to increase to 20% from 1st of July.
Royal Enfield will be investing about 300 crores in electric vehicle development.
Indian market as a whole was not unduly volatile post Jan 24th report. Absolutely choppy. It's blinking red and green. Right now we're seeing a cut of 10 points.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Surbhi. Guys, hi, afternoon.
Hi, afternoon.
Thank
We
God
made it
it's
to the
Friday.
end of the week, right?
Thank God it's Friday, guys. I can really say that with the kind of news flow that we've had all through the week and today especially.
Surbhi's looking forward to it. She's got something planned, right? Always. All right,
I've been bothered about that 40-page report that both of you read last night about the regulations.
Bothered with the
taxation, the LCR.
The taxation, the 40-page mutual fund report, the 154-something page Adani report. I think we can do with the weekend.
Thank God there is no FOMC and then, 11:30 press conference where, Jerome Powell will be talking.
But I think he is talking, right? Not at 11:30, but I think there is some speech scheduled later during US market session. So today's been interesting because we've got the Nifty, which broke the 20-day moving average on the index, which stood as of yesterday's close at 18,078. The low today was, I think, made at 18,060. And then we've had a nice, smart bounce, a clean 100. As of now, we're tracking a 105 point bounce from the lows of the day, which is 18,060. So this is, not a bad kind of picture at all. Although it's not building. So far it's failed to build. On the day from yesterday's close, by the time you get to about 20, 30, 35 point gain, the market starts to sell off once again. So there is some selling pressure coming in as well. But you've had a test and then a bounce off the 20-day as well. Now the Bank Nifty is the low which was made was 43,532, and there we've seen about a 250 odd point bounce. The 20-day there, of course, is also the sort of important reversal level. That is some distance away from where we are right now. That almost about 550, 600 points away from CMP on the Bank Nifty. Global markets are steady. US futures are higher. Actually, I was saying earlier, the S&P 500 futures are now trading below the psychologically important 4,200 level. They're holding slightly above that 4,200 level. So that bodes well, purely from a price technical action standpoint. So that's the overall picture. And this is, of course, a Friday, so last hour of the week coming up. Rima.
It's actually been a pretty good week for the U.S. markets. The S&P 500 is up 1.3% so far week to date. The Dow and the Nasdaq too clocking in a similar gain. The Dow Jones is up about 0.5%. The Nasdaq has outperformed. But for our own markets, we're exactly where we began trade with. The Nifty opening level was 18,168, which is exactly where we are. So after all the volatility, we're back to square one. Benchmark indices are currently up about 0.2, 0.3%. Prashant was talking about the firm opening in the European market. The French index, that's the CAC, that's higher by about 0.55%. The DAX is also up a similar amount, up close to about 0.55%. IT is the star in today's trade, and there has been no dithering, no volatility on IT. The Nifty IT index is up 1.5% with names like Infosys, Tech Mahindra, HCL Tech holding with gains of close to about 1.5%. And Adani Group stocks have seen buying in the last 15 minutes or so. Adani Enterprise, Adani Ports. Pull up that intraday chart and you would see that these stocks were down nearly about 2% when that report was being analyzed, but now they are some of them are locked in an upper circuit of 5%. Adani Power, Transmission. Let's just get one or two of those intraday charts to see the kind of buying that's emerged in the last 35, 40 minutes.
Well, yeah, I guess, the report doesn't leave us any wiser with respect to which way things are going. For that, there is a wait involved. There is that extension that SEBI has managed to get from the Supreme Court. So the wait and watch continues. So I guess incrementally we don't know anything fresh or new, or it's not a stance that the committee has put out, or for that matter SEBI has put out. So I think we'll still have to wait a while for this. On global markets, just to add to what you guys said, global markets are up absolutely 1% to 1.5%, 2%, depending on which index you're looking at. CAC, DAX, Dow, most of them are up. We've actually underperformed. India's down 1% so far this year. We've been kind of ambling along. Just a word on the mid-caps. And this middling along kind of has gotten more pronounced over the last 2 to 3 sessions. Once again, today the mid-cap index is underperforming the large-cap side of the market. It's been red for most parts of the day. A lot of result reactions are playing out, so I'll just name one or two. Today's biggest result casualty has been Gland Pharma, 20% lower over there. So investors in a very unforgiving mood, considering all the issues that the results threw up. Kirloskar Oil came in just a couple of hours ago. That stock's down about 8% as well. Some of the railway stocks like RITES and RVNL, they are cooling off quite a bit. So there is some tempering of the enthusiasm in the mid-cap space, but all's not lost. Result hits include United Spirits, since we are on Friday. Let's not forget that. LT Foods, some of the rice makers did really well. Remember those sky-high global rice prices? So that played out well for something like an LT Foods. Mixed picture. But yes, it seems that there is some caution in the mid-cap market. That's quite clear.
Yeah, no, absolutely. We've been kind of pointing to that last couple of days. By the way, is this the move that we've been waiting for? We're up about 45 odd points. And let's see if we can build on it over the next 60 minutes or so, less than 60 minutes or so. We are practically at the day's highest point, almost there, and so this could be interesting. A break, not a break, but then a clean bounce off an important support going into the weekend. Fingers crossed. Let's ask our technical experts in terms of how to position oneself in the last hour of trade. Rahul Mohinder is with us with that. Rahul, hi, good afternoon. So should one get not excited, but should one look to take longs or stay cautious that this 20-day now will finally go decisively? Which side are you on?
I think pretty much, as I've been explaining yesterday and day before, 18,050, that's a level I've been talking about on the Nifty spot. We've really bounced off that level. And, yes, you're correct to point that we had a touch and go on that 20-day moving average. It also sinks in with my level of 18,050. So there's no doubt that this is a well-respected point. This is an important level technically. And if I may add to that, that I've also been saying that we still have to call this decline of about 2% that we've seen over the last 5 or 6 sessions as a correction. It's too early to call this a down breakout. And I think the way I'd like to see it is, if we are really talking down breakout, let's breach 18,050 decisively. And, fortunately, we bounced off that level, so we're back within range. Now, on the upside also, it becomes very important to understand what is the level we need to reclaim to think that we're probably heading to newer highs or new intermediate highs at least. And I think that level is 18,350. So where we are right now is somewhere right spot on in between, where we need to, find direction. So I think it's going to be a very stock-specific call, and one has to be very particular in terms of these levels. Unless we kind of break through this 18,050 and 18,350, I don't think we're getting the next decisive 500-600 point move. So I think that's how important these two numbers are to me. I even pointed out earlier in the last few days, 43,500 is very relevant on the Nifty Bank. There too, you've seen not just today, but over the last 2-3 sessions, be well regarded and respected that level, which means the decline that you saw still fits into the tag of the correction. Coming to some stock-specific ideas, since I mentioned the importance of stock specifics, I'd start with an Infosys. Yes, technology has seen a bit of an up move, but the reason this comes into my radar is if you see post the sell-off we had in April, the big gap down move, we've largely been between 1220 to 1280 on Infosys. If you try and look at this from a slightly bigger perspective and not just a today, tomorrow, day after perspective. We need to understand that what we are probably doing here is taking some time here, consolidating here. And when you look at the internal volume setups, if one has a bit of appetite in terms of time, one could easily look at entering the stock. I think we would probably break out this range. Again, I'm preempting this, which is why I'd say come in with a stop loss at about 12.45. We're looking at a potential breakout out of this range, and I think 1315 could be a reasonable target to trade for. Tata Motors is another stock which I think looks, broadly medium to long term bullish to me. And that's where I would say 514 being a stop loss. One could look at near-term targets of 535. Once that breaks through, I think we could even head closer to 550. The third stock, which again comes up into the buy list, is another one from the auto space. Clearly, because I think the corrections have been to good support levels. 1235 is an excellent support for M&M. I'd say that, at the current levels, keep a stop loss below 1235, buy at the current levels. I think clearly we could move to about 1305 to 1310 on the stock.
For Infosys, the pre-earnings level was above 1400, so we're still quite a distance away. Currently at 1270, but just before the numbers came out, the stock was hovering above levels of 1400. But the star in today's trade is Ramco Cement. It came out with numbers yesterday, in fact, just towards the fag end of closing bell at 325. So the stock reaction is taking place today, 7% gain on that. Vivek is here with more details. Vivek, it's the volume growth which is positively surprised.
Well, absolutely right. Despite the very muted pricing scenario that you've seen across the cement universe, Ramco Cement clearly appears to be an outlier in terms of the kind of growth that the company has managed to see. So revenues have jumped up almost 50%. It's a strong beat to our own poll. Largely, as you mentioned, driven by the volume growth of 46% year-on-year growth in the volumes, with volumes coming in at 4.7 million tons in this particular quarter that's gone by. On the back of lower costs, petcoke prices have cooled off a little bit, and what analysts are saying is that going forward, margins could improve further given the fact that petcoke prices have further cooled off. But in this particular quarter, EBITDA is up almost 40%, margins coming in at 16.4%, and profitability has jumped up 22.6%. So it's a clean beat across all of the expectations that analysts on the street had. Now, Macquarie has come out with a note. What they're saying is that it's a solid volume surprise that has driven the EBITDA meet. What they're saying is that while the management is further evaluating expansion in the south, valuations that are quite reasonable at 10.5 times 1 year forward EV to EBITDA, actually caps the upside risk. Antique 2 says that, management believes at this point of time demand will continue to remain quite strong as far as FY24 is concerned. What they're saying is that margin improvement from the sharp drop in fuel prices. Remember, fuel prices have now gone to $125 a ton from $178 per ton. So margin expansion can continue despite, the lack of price increases that we've seen, especially in the South market.
All right, got that. Thanks very much for explaining all the details on Ramco to us, Vivek. By the way, that's a very smart number from Route Mobile. There's a 60% jump on the revenue. The profit, I think, has doubled from 40-odd crores. The EBITDA has more than doubled. That's a solid show. And the stock is absolutely skyrocketing away. It's done well, actually. This month has been a good month for Route Mobile. It's up 14-15%. Overall, this year, it's been a gainer. It's above market performance from Route with a gain of almost, I think, 17 to 18%. Bulk of that gain coming in actually in the last 1 month, and that's the showing for this year. Prakash Diwan is joining in. Prakash, good afternoon. Always great to have you on. Thank God it's Friday. So much news flow. But let me just toss some of these result reactions that we are looking at. Vivek was giving us some details on Ramco. Route's numbers look fantastic. Thoughts on either of the companies or both?
So, good afternoon, Survi. So I haven't had a chance to look at Route, but Ramco did come some time back before we started the show. And, that's the beauty about some of these old economy sectors when they start kind of turning around. And then when especially you have such a huge smattering of businesses or companies in the listed space, you will find somebody or the other, becoming an outlier and setting the trend, which probably others will follow. This has happened in paper, this has happened in sugar, it's happening in cement. So I think what Ramco tells us, and this is coming right towards the fag end of the earnings season, that what Ultratech and the biggies like Sri and Ambuja ACC indicated in terms of, price advantage, cost advantages, all of that. And here you have a player who's, thanks, I think, to the geography and the kind of expansion that they've done in the distribution network in the south, that they've been able to clock better volumes as well. So if volumes pick up, and typically, I think you'll probably brace for a little bit of a pause in the monsoon, but post that, if these volumes get sustained or even get get more widespread across businesses, the entire sector would get re-rated. And I'm very bullish on cement, but I still like some of the more well-defined business models like Dalmia, or even a smaller one like Sagar. So you have opportunities here. Ramco is something which I haven't particularly recommended earlier, but the numbers tell you that, and I'm reading or taking this thing out of the numbers for the sector as a whole, that this is something which could get replicated across the sector, and the names that I like will probably also start contributing. So very, very, very positive commentary, in spite of all this demand contraction, slowdown in rural markets and all that, because these players have the flexibility to sell wherever they get better realizations and in pockets which need that kind of output. So I think Ramco is a classic example of how well they've done, and this could probably start setting a trend of re-rating or multiple expansion for the entire sector sometime soon. Maybe in another 6 months, but not too far away.
Okay, that's Ramco. By the way, put up KEC if you can. I mean, the stock's up 12-13%. Numbers came, if I remember correctly, sometime back. And I'm not sure if there's any additional news flow. KEC International. We had Ambarish yesterday on this show sort of highlighting KEC as his pick. And he was basically saying that it's the non-T&D, non-transmission, non-power business, which actually he's most excited about. And that is now about 50% of the business. Used to be small, but it's now full 50%. The other half, of course, is still the transmission and distribution side of things. It's a big move coming through on KEC. Prakash, afternoon, you will have a call on this other name, Uno Minda, but let me go across to Sonia to tell us what has worked very well for the company in the quarter. Sonia, over to you.
Thanks a lot for that. So Uno Minda has had a fabulous performance in this quarter gone by. In fact, if you look at it across all parameters, right, the revenue growth of 20%, EBITDA growth of 16%, the margins have been stable at 11.1%, and the profit growth is 27%. Now, it has been one of the strongest stocks in the auto ancillary space, and the key segment like switches and lighting have seen growth in excess of about 20 to 27% in the quarter gone by. In fact, in the lighting business, the company won incremental orders of more than 300 crores in four-wheeler lightings from Indian and Japanese OEMs. But what I also liked in the numbers is that the return ratios have improved for the company. So the ROCE used to be about, the return on capital employed used to be 15.8% in FY22. It's improved to almost 20% in FY23. The net debt to equity remains quite low, so there's very low leverage at about 0.24 times in FY23 versus 0.15 times in FY22. So across the board, numbers are looking good. Back to you.
Thank you very much for that. Just some more color on Route Mobile. Now, this, remember, is a CPaaS company, which basically means it will help connect all the SMS transactions which happen between a bank and, say, you go on Amazon, you make a purchase, you get an SMS, right, that you have purchased. This is your OTP to complete the transaction. Those SMSs are done by Route Mobile. It gets half of its revenues from the India business, but it also gets half of its revenues from the overseas market. And Route Mobile has clocked in about a 61% year-on-year revenue growth. Now, the company has been a big beneficiary of the digitization, because as more and more people are shopping online, they're doing transactions online, whether it's the banking transactions, etc. Route Mobile and companies like Tanla have been a beneficiary of this digitization. The revenue growth for the company, though, at 61% year-on-year is a slowdown compared to the growth rates they've seen in the past. So 61% year-on-year revenue growth in Q4 compares with 75% in Q3, 94% in Q2, and about 93% in Q1. Though for the full year, the company has clocked in a 78% top-line growth ahead of the company's guidance of 70% growth. But remember, this is not pure organic growth. The company has made a couple of acquisitions, so the organic growth would be somewhere around half of the overall reported growth. But the company had guided in their last interview, I think they had said that Q4 growth will not be as strong as Q3, which is something that is played out. Though for the full year, 78% top-line growth ahead of the company's own guidance of 70% growth. Let's see what they guide for next year. Prakash, do you want to comment broadly on Route Mobile? I know you've not had the chance to go through the numbers, but structurally, the place, the segment where Route Mobile plays in, do you like CPaaS companies?
Oh, I think it's extremely promising as a space, Riman, and it's almost like a duopoly where one of them has to get an order from any of the service seekers. And the beauty about this business is that you have pricing power, which will continue to be maintained because there are not many substitutes, right? So from there's no threat of substitute, there's no threat of internalizing this activity by any of these providers or any of these customers. And the biggest trigger, if you ask me, for Route Mobile to go to the next level in terms of the business and possibly the price on the stock as well, is going to be how quickly they become dominant in the international markets. I mean, they've had quite a few, forays into some of these Asian markets where they've collaborated with telecom providers, but it hasn't been such a significant revenue engine for them. So once that happens, the dependence on India comes down, and globally they have this thing, and that kind of makes it very balanced. So any slowdown in a particular economy or any change in regulation will not impact them. So that's the only way they can probably scale up in this value chain. And I think they have the capabilities. I think promoters are smart enough, and we've seen the stock do very well, since it's been listed. But it's an expensive space, so always be careful when you invest into these, especially in markets which are still a bit cautious, and maybe you might not get so much of follow through in terms of the price movement. So, but you'll definitely find the business very interesting as it kind of scales up into, as I said, the global markets.
Okay, that is Route Mobile. We need to take a break on that note. Lots of other stocks to discuss. We will also be chatting with Mithun Ashwath, Managing Partner at Kiva Advisors on the other side. So keep it with us.
What if you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know? You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. The stock of the day on the way down is Gland Pharma. Very, very weak set of earnings. We're looking at a revenue growth decline of 28%, the lowest EBITDA margin since listing. And it's not just this quarter. For the last 4 quarters, the company has been reporting a decline in their earnings. Ekta joins in with the details and the brokerage fine print. Ekta.
Thanks for that. Well, yes, if you compare Gland Pharma from the time it listed, which was basically at an issue price of around 1,500 and listing price of 1,700 odd rupees, you can see that there's a complete destruction in terms of wealth which has taken place. Now, for this quarter, the revenue was down around 28.8%. Margins came in at 21%. The street was anticipating a revenue decline of 14% and margins of around 30%. Profit of 74 crores versus estimates of over 200 odd crores. EBITDA margins, like you mentioned, were the lowest that we've seen since listing of which is way back in November 2020. Now in Q4, basically there was a lot of impact. So for example, there was a production line which was shut down. There was reduced business from the B2C division in the domestic market. There was softer offtake in the rest of the world market due to tender seasonality. All of the geographies contracted. Core markets were down 23%. India was down 68%. Rest of the world was down 10%. And however, what the concern is that Q4, while it was impacted by one-offs, the larger picture is that there has been a consecutive decline in terms of numbers. It was the fourth consecutive quarter of decline in revenue and profits for Gland Pharma, and the management has not even provided guidance going forward. So that is what is concerning the street. The multiple quarters of an earnings miss, earnings decline is what is concerning the street, that whether or not this is actually a systemic problem that the company is facing. Bernstein has an outperformed target price of 1,700 rupees. Q4 is widely off the mark according to them. The management outlook remains weak. Jefferies has downgraded the stock. Nirmal Bang too has downgraded the stock. Both of them are cautious in terms of the future outlook.
Okay, thank you very much for that. Prakash, tough one, right? Gland has been disappointing for the last 4 quarters now in a row, as Ekta's pointing out. Do you see more downside, or do you take that leap of faith and buy Gland Pharma because of the way it's corrected?
Oh, no. This is a falling knife, and you're always better off not trying to catch one. The worrisome part is not that, on an absolute basis, 21% margin is not something you would want to be very uncharitable about. But the expectations have been so high from this business ever since it got listed. I mean, there was this fancy for the stock which brought it to levels which are exorbitantly expensive. And it's just kind of, now correcting in a faster way because the performance has been so disappointing. And now the worrisome part is, there's no clarity on how long does this go on. So if this were to continue, there's no visibility or indication by the management in terms of saying, okay, we are in a position to stem this fall or slow down in the business in the next couple of quarters, which would give some sort of a turning point. So I think it's going to be difficult for the market to believe that this would probably be a end of the tunnel, and there is going to be light at the end of the tunnel. I don't see that happen. So it's better to kind of wait for the next couple of quarters to see if there is some sort of a turnaround, and only then. And the businesses they are in are fairly. I mean, they have a dominant position in their businesses, so that's more even surprising. Why the disappointment is so severe? Because while you are in a dominant position and you still don't deliver, it's definitely something which is a cause for concern.
Got that. Okay, Prakash, thank you very much for joining in today. Always good talking to you. You have a great weekend, and we look forward to connecting again. Thank you. By the way, look at Adani Ports, 4% higher. Adani Group stocks are really running away, and Adani Ports has gained more momentum and traction. So has the market actually, now closer to 18,200, so not so bad considering where we were around afternoon. Okay, taking the conversation ahead, we've got Mithun Ashwath, Managing Partner at Kiva Advisors, joining in. Mithun, thank you very much. Always good to be speaking with you, and glad you can make out the time today. So we've been in an interesting market where incrementally, it's been a slow grind up, so to speak. First of all, what's your sense? Are we going to continue to be range bound, and it's going to be just about picking that individual right stock, or do you expect decisive movement either direction, up or down?
Yeah, good afternoon, Surabhi. I think, the Indian markets, after close to a year of sort of consolidation and trading in a band, primarily because of, concerns on inflation and interest rates, seems to be at a point where, the markets could go to higher levels. And we do think, FII participation, which was also lacking, has started to re-emerge. and we've seen close to about $2 billion of inflows over the last couple of weeks. And we think this trend could continue where, India could attract more of the emerging market flow, which was earlier moving to maybe markets like China. And we do think that is definitely the markets look positive from here, and we are likely to head higher.
Mithun, you believe the correction in the technology names that we've seen in the last, say, 1.5 months since the beginning of the earnings season is a good time to accumulate over the medium term. In technology, can you provide some color? Which are the stocks that you would recommend buying?
Yeah, I think on the technology side, you've seen, select companies report quite strong numbers for the quarter. However, the larger companies, maybe Infosys has disappointed, but that could be maybe a little bit of a one-off. So, opportunities do lie in some of these stocks, maybe like an Infosys, which is now trading at, even lower than historical average multiples. And if you do see improvement in the US economy, we do think, there will be some catch-up in some of these type of companies.
You want to name some of these, because we got the sectors that you like here. So real estate ancillaries, Mithun, afternoon, any specific ones you want to name that you have in your portfolio, you've bought recently?
Yeah, I think on the IT side, I think we've discussed before, on the small mid-cap side, we have a company called Explio in our portfolios, something that we've advised on. Apart from that, on the technology side, we also have, on the large cap side, TCS as one of our holdings. And as well as we also have Persistent Systems. So these are the three main holdings across client portfolios on the technology side.
Okay. No, I was asking the real estate ancillaries that you like.
Yes.
Do you own any of them, or you? Yeah, go on.
Yeah, I think on the real estate ancillaries, something that we've held on for a long time and we continue to be quite positive on is Cera Sanitaryware. I think they've reported good numbers for the current quarter, and the management has guided for about 2,900 crores of revenues by September 25, which provides about a 20% compounding even from the current revenue number. So this is something that we continue to be quite positive on. Apart from that, on the cement side, we like Ultratech, and as well as we like Grasim, which provides you a play both on paints as well as cement. So those are 2 or 3 names that figure prominently.
By the way, PNB numbers are flashing at the bottom of the screen. Net interest income is gone up about 30%. There's a big jump in profits, but I think what we will also do is put out these numbers in relation to what was expected, because of course expectations have been running pretty high as well. So more analysis on those numbers, but prima facie things look pretty good. Gross NPA, there's been a reduction, 8.74 compared to a 9.76, so about 100 basis point reduction there. Net NPAs have come off quarter on quarter, 2.72 as compared to 3.3 odd% or so. So that's PNB for you. I mean, everyone loves financials, Mithun, to varying degrees. Some believe maybe they've already done quite a bit and they'll at best be market performers. In this space, what do you like?
Prashant, I think on the financials, we've continued to remain focused on the large private sector banks. Those are the ones that we are focused on, be it the Kotak and HDFC. I think these two will continue to, deliver, growth above market. And we do think there is a case for these companies which had not performed in line with the other financials to do some catch up. And we do think that is likely over the next 3 to 6 months when, the struggle for CASA will become apparent and, the leaders in this space will start delivering.
Okay, Mithun, just before we let you go, let me ask you about the theme that's been the dominant one in the last 1 year, and that's capital goods. Companies have reported pretty good numbers as well. But then the stocks have also run up. So, the likes of Siemens, ABB, some of the smaller players. Anything on your radar?
Nothing specific at the current juncture, because I think valuations do price in quite a lot of the positive news. So nothing specific on the space at the current juncture.
Okay, all right. I think we'll leave it there, Mithun. Then thank you very much for joining us. It's always a pleasure having you and speaking with you here on CNBC-TV18. We'll take a quick commercial break, but just a quick programming note. Our weekend special editors roundtable is coming up at 4:30 this evening, as always. And we touch upon various topics. We get you a sneak preview of some of the themes. The SEBI's 40-page consultation paper on expense ratio, what it means for AMCs. I'll put the spotlight on that. Nimesh will look at the country's largest exchange and put NSE in contrast with some of the global peers. And we also look at the quick service restaurant space. Stocks have corrected quite a bit. Numbers which have come through have been good. And Mangalam will get you a roundup of that. Our guest at 4:30 is Samir Arora, a fund manager at Helios Capital. Of course, they also have a mutual fund business now. So it'll be an interesting conversation. So that's coming up a little later.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
An exquisite solitaire, truly special.
कर लेता हूँ।
पैसों की कमी से अपॉर्चुनिटी मिस हो गई? किराना तो नहीं, पर स्टॉक्स पे बाय नाउ एंड पे लेटर विद ICICI Direct MTF. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Welcome back. So we continue to see just about 50 to 60 points of an upside on the index. Good time to get the chatter in. What are dealing rooms saying today? Nimesh is here as always. Nimesh, not bad, right? Now when we look at that screen, I mean, the bulls will say, okay, not bad. It's a decent way of getting into the weekend, at least not on a low.
Yes, sir. I guess the last half an hour move is largely on back of a bit of surge in the Adani Group stocks, and that has led to a bit of rally in the bank stocks as well. But broadly, the sense I'm getting is it's again the flows are quite muted, not much in terms of volumes as well at larger FI desks. There's going to be a small market at close basket buying. That apart, there are not large flows from the larger institutions today. I guess in terms of sectors, there is a bit of selling in the metal names into today's trade. On the other hand, some bit of buying is back in technology stocks. But the big sector which seems to be, where there's a bit of momentum now is the real estate names. Every now and then, you'll see a bit surge in the real estate stocks, largely on the back of the institutional buying. So both domestic and FIs seems to be having a bit of a buying interest in the real estate names. That's the overall feedback. From a technical point of view, again, 18,300, 18,400 stands out to a big resistance. That was a big resistance for this week as well. And I guess that's something to watch on the upside. But broadly, barring that small market close basket buying, the flows are quite muted. And it's very much into few specific sectors like technology and real estate in today's trade.
Well, now, Nimesh, a lot more stocks are participating on the way up. Pull up that intraday chart of HUL, Bharti Airtel, private sector financials like IndusInd Bank. ICICI Bank has had a big surge in the last couple of minutes. Axis Bank has moved up nearly 1%, and Reliance Industries, too, is contributing on the way up. Any individual stocks that you have on your radar where you are picking up some buzz?
Yes, Rima. So in terms of individual names, the first stock on my list is Bandhan Bank. After a bit of an up move in the last few days ahead of the results, this stock is under pressure today, largely on the back of block selling, is what I understand, and that's the reason why the volumes are on the high side, and on back of FI selling, that stock is under pressure today. So that's the first one. The second stock on the other side is Axis Bank. You've seen a bit of a late surge in Axis Bank. There are buy flows as well, though small, but there are buying flows at leading FI desk. And remember, Chris Wood today has added Axis Bank not only to the India portfolio but to the long-only Asia portfolio as well. So there is a bit of interest back in Axis Bank from Jefferies as well as from FI buying. The third stock is Gland Pharma. There were multiple blocks in today's trade, but I understand it's going to be it's largely between FIs to FIs, but the buyer seems to be a very large long-only fund, and hence you're seeing a bit of an up move in Gland Pharma as well in the last few days and even in today's trade as well. And the last stock is Tata Chemicals. After the results, you saw a bit of a reaction on the downside, but now at these levels, some bit of buying seems to be back. So the volumes are on the high side today. The delivery volume is expected to be quite high, and some bit of FI buying has resumed in Tata Chemical as well.
Okay, got that. Nimesh, thanks very much for all the buzz and all the updates there. With that, let's get to technicals as well, considering the market has managed a bit of an up move for itself. Rahul is back with us. Rahul, so final call before we get set for the weekend. Index, what's the advice, and any more stock ideas?
I think the index, as I mentioned, 18,350, that's the number to watch on the upside. And, I continue to think we're pretty much in a range bound, medium to long term. We continue to sustain the uptrend. The overall view, I think stocks which are kind of ending in good shape. One is Bharti Airtel. One can clearly see it knocking out a few levels here. 816 is a near-term target we have on it, but I think going past that, we could even hit to about 832. So that would be on the buy list. Keep a stop loss at 794 when going long. Unilever too, it bounced up from that 2600 support level. So I think we're probably headed to about 2680, 2690. One could go long at current levels, keeping a stop loss at 2615.
Let's drill it down then to some of the big earnings that we will be watching out. Tomorrow it's going to be Divis Laboratory. Ekta joins in with the key expectations. Ekta.
Thanks for that. Well, for Divis, this time round, we're expecting a Q-on-Q recovery. So revenue is expected to grow around 9% on a sequential basis. Margin should come in at around 29% versus 23.9%, and profit up around 22%. Now, remember, Q3 FY23, revenue was down 31%, EBITDA was down 63%, profit was down 66%. Margins in Q3 came in at the lowest level since FY12, which came in at 23.9%. So this quarter, the Q-on-Q recovery will be watched quite closely. The revenue is expected to be led by the non-COVID custom synthesis business, as well as supplies of APIs for a heart failure drug to pharma company Novartis, which could range anywhere between around over $20 million in terms of addition as well. Margin range, like I mentioned, is anywhere between 25 to 33% That would be a recovery on a Q-on-Q basis. What they sustain at, what their guidance is something that the street will watch out for quite closely. Remember, Molnupiravir sales have completely depleted for the company in the past couple of quarters, so we don't expect that addition to come through on a year-on-year basis. The numbers will be impacted on account of it.
All right, Ekta, thanks very much for that. I mean, the surge is coming, but it's coming late into the day. 90 points now on the Nifty, and things are looking much better as compared to the listless day that the first half really got. We're at 18,215. We have a special guest in our studio. Sanjeev Bhasin is director at IIFL Securities, and he's with us here in the studio. Sanjeev, great to have you with us here.
Yeah, great to be here.
Almost as if the market is giving you, क्या बोलते हैं, 21 तोपों की सलामी. I have to say, Sanjeev, the last time we spoke was bang on. You said 18,500 by the 15th of May.
15th of May.
And I was just looking on the 15th of May, the high was 18,460. I mean, so you almost did that for all practical purposes. And since then, it's been a bit of a dip. So you look at these turns very closely, Sanjeev. I mean, what is this? Is that 18,500 that move complete, or is that still pending in your view?
Yeah, so great to be here firstly, and I would attribute it to the lovely ladies. But yes, if you had called me a couple of days earlier, the bears would have had their show. And no harm done, Prashant. We think there was a little bit of maybe froth in the market and a left out feeling. So the bears had it good for the last 2 days, but write it down. Wednesday we cross 18,460 and we hit 18,500. And we are looking at new highs coming. So all the bearish talk will get on its humdrum. This is the time to buy. You cannot have better macros. You cannot have better results. You cannot have better flows at a time when the most unwanted guys are now the buyers. So generally the saying is, take it with a pinch of salt. When the dumb money sells, you should buy. And when the dumb money buys, you should. I don't mean that they are dumb, but it comes in herds and flows. But that dumb money is here to stay. And I think that liquidity itself will take us well past 18,460 by this expiry.
You said new highs as well, or not quite. I mean, it's not 200, 300 points basically. 18,887 is the high.
Exactly.
Do you think that's coming?
That's coming definitely, but maybe in the first week of June. Okay. However, to be a little cautious, second half of June can be where the big correction comes globally. So I would say this is a time not to give in. This is the time to add what you want, because we've got all the three calendars working. You know, when have you seen ABB, Siemens, Cummins, Bharat, Thermax, L&T hit all-time high? Surbi, in my 33 years, I have not seen that. Which tells us that the Capex story is up and running. Tata Motor is hitting new highs. Nestle is hitting new highs. The DAX is hitting new highs. Nikkei is hitting new highs. So why are we fretting?
But you are anticipating a bit of a global correction in the second half of June and July. Can you talk about it, and how deep will it be?
Riva, let's get to the better part first. You know, it's a hot summer. We want to hit new highs first. Then we'll talk of the correction. There's still a month to go. By the way, I'll be on leave from 15th of June.
So we can't even quiz you at that point in time. But we'll keep that in mind. So let me talk about the optimism that you mentioned, Sanjeev. And absolutely, I mean, no taking away from that. Look at the way these companies have performed, right? I thought I'll retire. My career would be over till we start seeing this whole capital goods story play out. And, you know, when companies like Thermax and Siemens and ABB, the way they're coming out, the confidence with which they're speaking, that point is taken. But stocks have also run up. So then what are you picking and choosing? And if there's one thing, you know, if I can put one pinprick in the bubble or, you know, in the sentiment, it's L&T. You know, we remember the 5% fall that L&T had on its result day. The entire market was, absolutely, taken in by the margin pressure. Now, was that just nitpicking in a much longer upcycle? What's your sense?
Yeah, very good point. And by the way, Surbi, congratulations. Since the time you came back, the markets have started to trend their way up. So you are a sign of a beacon of green. Now, L&T numbers are well discounted. It's one of the biggest capex stocks. It also happens to be highly liquid. Now, 2,400 may have been overstretched. It's corrected to 150, but you cannot have a pedigree management like that. Yes, their margins have always been, debatable whether it will be high single digits or more on the double digit side. But I think this is a buying opportunity. L&T is the type of order book, the type of activity you're seeing in hydrocarbon, electricity, it's a no-brainer. By the way, we forgot to see the NBFC results. Look at Chola. When did you see Chola at 1,054? I've never seen it. Also, let me tell you that I think that, the left out feeling is humongous. See, Surbi, we have to take it with a pinch of salt. India will not be a cheap market. Simply on the back that the retail flows. I mean, I've been in the market for more than 33 years. I've never seen. And I counteract with a lot of the retail public. They, in smaller cities, they are ready to commit just on what your goodwill is. So I can see that trend lasting for many, many years. And that's not going to change. And on top of that, now you have this, the data which I just got is that in 16 days, they bought 27,000 crores. It has never happened in 3 years that this type of consecutive buy. So
I was speaking to a mutual fund manager on that note just this morning because of the other situation that's playing out over there. One of the arguments, of course, some participants are quite disappointed in the industry. One of the arguments was that we've held the market through, and look at the equity culture that's built up. FIIs have stopped mattering as much. Well, it's a long haul. It's only a discussion paper. We need to see what comes out of it. But I do think we have to take a very quick break. Sanjeev, stay on. We have lots of other questions for you. Quick break and back into this conversation in just a moment.
What if you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
It's okay for us to nod for everything. Because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Double the joy with Canara Bank. Canara Home Loan and Canara Car Loan. 100% waiver on documentation charges and concession in processing charges. You deserve the best. Canara Bank. Together we can.
All right, welcome back. You're with us here in Closing Bell. The market's up 84, 85 points. Sanjeev Bhasin is with us, and we were just chatting about stuff that he likes. And he likes 3 stocks, so we will go to each one of them one by one. I want to start with Piramal Pharma, right, Sanjeev, that you like. Tell us about it. I mean, we were just discussing how it was a long-awaited demerger. It happened. But the individual business price performance since then has been very, very subdued, very muted.
Correct. So, Prashant, originally the Piramals were only in pharma until they sold their blockbuster to Abbott and so on. And then they went into, the real estate side. But in API and contract farming, this is doing excellent. And, at the price of it is available at a market cap of 7,500, 8,000, you cannot get such a big company of the pedigree they have. At this time, the pedigree of these managements is very, very essential because you're not at cheap level. So I think Piramal fits the bill perfectly. It's a very, very good add on these prices. I think this stock can give you very, very good return. You will wait for the numbers. Maybe one quarter can be disappointing, but that's in the price. I think this stock is a must-have in all portfolios.
Can we talk about another stock that you like is Jubilant Ingrevia? I was just checking the Q4 numbers. Didn't look very good, Sanjeev. Revenues were down 11.6%. Margins contracted by more than 200 basis points. Profits were down 24%. They've also said Q1 will be a bit subdued because of the pricing pressure in the agrochemical space. So what is it that you like in Jubilant Ingrevia?
So see, Rima, the first company which the Bhartiya started was originally VAM Organic, which is Jubilant Ingrevia. It's a spin-off of that. It's a 70-year-old company. You rightly said there is pressure on agrochemical, but look at their other businesses. Any other business they have done, they have doubled their margins in some. So this one quarter can be a little bit of a, but look at the future prospects. Again, like I said, the management is what I am focusing on. The pedigree of the performance of the past, and I think the future belongs to these specialty chemical, homegrown businesses which have a very, very large pedigree from before. I think that once, and we are at the anvil of a very much expected rainfall and other things. And globally, we've seen that food prices have gone through the roof. So I think that agrochemicals is going to be a very, very key area, maybe in the next 2 quarters. But this stock fits the bill perfectly at below 400 to an add.
Okay, before we carry on, I just want to point out Siemens. The stock is now reacting. This was a development that happened just about 20 minutes ago. Pull up the intraday on Siemens. They're selling one part of the business, which is under the listed entity, Siemens, to Siemens AG. I mean, Siemens has several, I think 13 different entities in India. One of them is a listed one, which is on our screens. So they're moving this business. This is the low voltage motors and geared motor business to a subsidiary of Siemens AG, the German parent. The sale, Vivek tells us, is 2,200 crore rupees. And this is basically moving to the global parent. And then the board will be meeting to consider a special dividend as well after this goes through. Clearly, it seems the market has some issues with this. They're also acquiring the electric vehicle division of Mass Tech Controls. That's a small acquisition. Doesn't seem to be too big because that value is 38 crores. The moving away of this low voltage motors and the geared motors business from Siemens listed here to the parent, German AG, the consideration 2,200 crores. There are probably some questions there, which is why the stock seems to be reacting.
Related party kind of concerns.
Yeah.
But this also could be shoot first, ask questions later type of reaction. So I think we'll have to get into the details and all of that stuff. The special dividend, which means that they're saying up front, I've not looked at the announcement, but what they're saying is that, if this is being done as a slump sale, we will return that cash to investors. So maybe more detail is awaited. Maybe the management will speak later as well. Sanjeev, you got one more name that you like, which is Chemplast Sanmar, right? Which is, it's all pharma, chemicals. That's the space you like.
Yeah, so I booked some profit in some of the high-flying stocks and got into these. Chemplast Sanmar again is one of the best groups in the south. And again, the new order book which they've got from some big orders in Europe, those have been staggering. And I think this stock again trades at very reasonable valuation. Secondly, the biggest thing is the pedigree of the management and the past. And I think the future belongs to them. Prashant, these are 3 names which are, prospective. But I would like to say some other themes which have played out and which I am very bullish. So Godrej Property. This is one stock which you remember at 1,000, 1,200, I've been very bullish. Godrej Property is headed to 1,850 or 2,000. Simply because whenever I go anywhere, you imagine the price of what, or if you take a 2-bedroom in Bombay, or the type of feedback I'm getting from Gurgaon as far as, aside from DLF, now Godrej is one of the biggest players in NCR. And the order book and the type of sales they are saying, because for the first time, the Godrej Group, when interest rates were much lower, actually started investing. They used to take it on a franchise model and sell it. Now they have taken those land tracts and I think they will pay rich dividends. So Godrej, DLF as a disclosure have been 2 of my top picks. They continue to be the stars in our portfolio and we think they will outperform. Along with that, how can I forget any market without Reliance? If we have to go to 18,500, then Reliance has to be 2,600 because there is nothing else which has that much of muscle and power. The demerger is a no-brainer when it happens and we know the type of length and breadth which you are getting. ARPUs are at 200 rupees. For God's sake, start giving them credit as this 2-man show of Bharti and Reliance, become a juggernaut. So Reliance as a disclosure is headed to 2,650 and I think we should see that maybe in the next week. A thumbs up to the bears.
Sanjeev, my issue with 18,500 is that it's just still a 2 to 3% kind of a return if you look at it year to date, right? You want the year to give you a 10, 12, 15%. That's what you invest
that we have to
in
call
equity.
Sanjeev back after his holiday.
17,000 tha when I came with Prashant and Sonia. You know the color, and Sonia has 1 million followers like you. And when she turns bearish, then a lot of my friends, they say, "Bhai samjhao." So I said, "Hold your horses, Prashant. We are going up." 18,300 is very respectable, but right now everyone is perplexed whether we've hit a top for the time being. I'm just denying that 18,500 is coming and then we'll take
what
it.
What Sanjeev means is 2-3% in a week, so annualize that. So that's all right, Sanjeev, it's a pleasure. Thank you very much for dropping by. I hope we can have more chats. Do drop in the next time you're in Bombay.
And next when you're in Delhi, you're most welcome to my humble restaurant for a good meal. It's a pleasure being here and wish you all the best.
And next time you come to Bombay from your, from Delhi, please get the butter chicken.
I'll get that. And Reema, you forgot you had to do the bhangra when we hit 18,400. I'll give you some lessons in that next time.
This is good. This is good. Lots of Delhi talk. You have two former Delhiites on this anchor panel as well, so we relate with it.
All right. Well, that's Sanjeev Bhasin with the thoughts on the market. The market's come off a little bit, right? I mean, it's not really built on with after being up about 85 points or so, 76 points. But this is, I mean, the second half has proved to be very, very good for the market as compared to the first half. 18,200 or round about there is where we will end. The low today was 18,060. So this is a solid 140, 150 point move from the lows of the day on the index that we have. Let me quickly take a look at the Nifty Bank as well. Nifty Bank is up about 0.4%. That's 200 points. Again, from the lows, the Nifty Bank seeing a very smart recovery. Let's look at the Midcap Index. Midcap Index is flat, absolutely flat. Off the lows by a lot, but down 40 points. And let's look at the Small Cap Index as well. And I think we'll see a similar kind of picture. Absolutely flat, but off the lows. Market breadth was quite negative at one point earlier in the day. It ends, closer. 1,050 stocks are higher, and you got about 1,250 stocks which are lower across the NSE. Reema.
Pretty remarkable in terms of a comeback. 18,200 plus is where the Nifty is currently at, 0.4% higher. Big gainers include Adani stocks, Adani Ports, top Nifty gainer, followed by Adani Enterprises. Both these stocks are up close to about 3.5%. Tata Motors has gone ahead and hit a fresh all-time high. Tata Motors is now at 524. IT stocks are providing a lot of support. Tech Mahindra, Infosys, HCL Tech. Axis Bank moved up. ICICI Bank moved up towards the close of trade. On the losing side, Divis Laboratory under pressure. It's broken its 100-day moving average. The stock is down 2%. Reports numbers tomorrow. So ahead of that, there is some weakness, softness seen in Britannia, Tata Consumer, Hero MotoCorp, down close to about 1%. But all in all, not bad on the Nifty and the sensex. It snapped a 3-day losing streak, but Midcap's a bit subdued. Though there was that
bit subdued, but very sharp moves on either side. It was one of those days. So, I mean, on the upside, for instance, you've got a Ramco Cement. We discussed that stock, 8% higher. KEC International flying away 9 to 10% on that stock. Good result reactions included United Spirits, Route Mobile. So these were your names on the upside. By the way, by the end of it, a lot of the mutual funds, remember the day started off with that big news about this SEBI consultation paper and what it does to mutual fund profitability. HDFC AMC has kind of pared its declines. It's just a 0.25% lower now. Nippon Life is actually up 0.5%. Aditya Birla Sun Life Mutual Fund is down about 1.5%. Speaking of the downers, I guess today's biggest stock reaction on the way down was Gland Pharma. Extreme disappointment in the market, quite evident. Rights has lost about 5.5%, and probably Siemens stands out in the last 20-minute move after that corporate announcement coming in. They're hiving off one part of their business, moving it to the global parent. Market didn't kind of like that, at least first glance, and the stock was down about 5%. So sharp moves on both sides in the mid-cap market. The mid-cap index ending absolutely flat.
Okay, the bell has gone and officially the trading week has come to an end. We're going to wrap up on closing bell. Don't go anywhere. Our Friday special, Smart Money, comes up next.